Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, December 16th, intraday 2008. Alright folks, let's talk a little bit about what's going on today, because the first half, or the first quarter of the day, I should say, really from 8:30 in the morning till about 10:30 was very active as Goldman Sachs reported earnings. They reported a loss of $2 billion, which was, believe it or not, less than what the market was fearing they would report, in the range of $4 billion. On that, Goldman Sachs has rallied dramatically. We'll touch on that chart very quickly. Secondly, Best Buy comes out with retail earnings there for their company for their last quarter, and they actually beat on what the expectations were, meaning the expectations were even worse than what they came out with. They came out and beat on revenues. The stock soared up over 10% on the day. All right, so that basically setting the scene this morning. We also had CPI data, as well as some other key data that came out. But really, the whole idea here, folks, is that the overall bias for the news this morning was on the positive side. The markets went to a little bit on the positive side. You had the NASDAQ up 20 to 30 points, the Dow up about 100, and the S&P, it was up 10, 12 points on the day, you could say, for the most part. Now, the key here, folks, is this. All right, the markets went into sleep mode, and I mean sleep. The volume died out to a crawl. You almost would have thought the markets were closed today. But all of a sudden, we all know that the Federal Reserve was going to release their rate decision and their rate, cut, or whether or not what they were going to do in that respect. The market was factoring a 50 basis point cut to half a percentage point on the Fed funds rate, and that was why the market went into sleep mode, because everyone was just waiting to hear what the Fed said. So 2:15 rolls around, and I'm going to show you the intraday chart so you guys can kind of follow along. And again, this is live, guys, as I'm doing this video anyways, and you can see that the market is trading. This is the daily chart of the futures, but we can kind of flip over here to the intraday, and you can see the volatility that ensued following that rate decision. So 2:15 p.m. Eastern Time rolls around, and all of a sudden nothing happens. Nothing happens. 16, 17, 18, 19, 20. 2:20 p.m. the Federal Reserve comes out and basically cuts their target for the Fed funds rate to 0 to 0.25%. That surprised the market, caused an initial rally that took the markets up huge. We saw an initial spike in this market, and basically the Federal Reserve said the economy's not good, the world market's not good, the credit is still not flowing, and basically they will do whatever it takes to get this market going. The market reacted in jubilant fashion, all right? Massive rally here. This is a 10-minute candle. All right, we use 10-minute candle sticks on this chart. 10-minute candle, big rally. A little bit of a pullback into the end of that candle. Then another rally, even higher, and this sent the futures up 25 to 27 points in this candle. Now, as we're talking, we see the market pulling back in, and this is why we talk about the volatility once this Federal Reserve releases their rate decision. Any rate decision, you have to be on super caution mode. We always tell people in the chat room, that we run for day traders and swing traders, that we're basically stay out of the market for a good hour, half an hour following the rate decision, and really the whole day prior where you're just trading sideways. There's not a lot to do either. But the reason you stay out here is because you can get caught in these whipsaws up and down and just get whipped out. I mean, this candle, literally, this one, it looks nice and proper. I mean, it went up here and then pulled back here. But this candle literally shot up initially, up 20-plus points, then it pulled back to go almost negative in this candle right down here, then rallied and back and forth, back and forth. So going long or short on that decision, you're getting stopped out as long as you're using your stops, which if you're not, you're crazy. So in any case, that's a little bit of intraday analysis I just want to focus on, folks. And you can see that the market continues to pull back here. Futures are only up 15 points right now after being up 27 since I started this video. So let's do a quick market check, guys. And again, we'll get a quick check on the futures, which are up 15.5 right now. The Dow up 178, so we're still holding on to the gains, no doubt about it. The NASDAQ up 42, the S&P up 22.5. And again, this is the key, folks. Look at the volume here this morning. All right, you had a little bit at the open in volume, and then nothing all day. You could have gone to sleep. Literally, this was a sleep mode, as if the markets were closed. Then you see what happens when the Federal Reserve comes in volume-wise. The traders come back in full force. People trying to react to this whole situation where the Federal Reserve is basically cutting their target on the Fed funds rate to 0 to 0.25%, which is the lowest ever, folks. That's it. I mean, there's not any lower to go than 0, so... next are we going to see negative? That's the big question, and you got to kind of chuckle at yourself as we get into this mess that this economy is right now. But let's talk a little bit about intraday, guys. One thing I do want to point out here for this spike up is the one thing I will put in, and then again, folks, those of you that are interested in this kind of a technical analysis where you look at charts and you decipher where this market's going, and you can tell, I'm telling you, you use all these different methods that we teach in these videos, in our webinars, and so forth, you will become a trader that can tell what the future is in this market. We do it. We do it every day in the Research Center. We'll tell you what's going to happen. You guys know our accuracy for the most part that have been following us for a couple years now. In any case, what are you seeing right here? All right, this is the only thing I'm going to point out. That's called a in spirit of bull flag pattern. It's a bullish pattern. Notice it's pulling right back into that 20 moving average. For instance, let's look at the QID, which is 2 times short the NASDAQ, or the Qs, the QQQQ. What pattern is this? It's a reverse, obviously, since this is short, so if the market goes up, this would fall. Look at that pattern. All right, is that telling you any more that you're going to have a spike down in the QID when you're trading sideways to slightly up, consolidating in a bearish flag, in spirit of bear flag, right into the 20 moving average, and look at what happens. I mean, this pattern, you can't get any better patterns than that, folks. Again, the risk is involving the whipsaw nature of the market, which is a high risk situation, but that's a pattern that you cannot deny. Absolutely fantastic pattern, folks. And you can play at the SPY. Let's go to the SPY. Same thing. Here's your move up. All right, consolidation right into the 20 moving average. Blast off. It doesn't get any better than that. Anyways, folks, enough of this. Again, I do encourage you all to come join the Research Center on inthemoneystocks.com. It is by far the best research product out there you will ever find. As you learn the keys, we talk about our proprietary techniques, things we've discovered, psychology, level 2, you name it. We try to cover whatever we can throughout that. And again, come join it. We will love to have you. Last but not least, let's touch on these markets again, which are pretty much now falling into a little bit of a range. And let's do another quick spot on the market. The Dow is still up 188 points, so a little higher than what we just noted, as it's had a little bit of a bounce back. And the NASDAQ trading up 40 points, and the S&P up 22. That's about 2.5 to 2.25% across the board. And again, folks, come join the Research Center. Also, we posted a webinar date in early January, January 3rd. It's on a Saturday. It's a 5-hour course where we go into all these technicals that we use, and we teach you these technicals. You'll see our screen will be on your screen at home. You'll be talking directly to Nicholas Santiago, our chief market strategist. He's the one that makes all the gutsy calls out there. So go to inthemoneystocks.com and sign up for that as well. Have a wonderful day, guys, and join the Research Center to see tonight's levels, the key plays, so you know how to set up for the next week and the next day, and that'll all be revealed on tonight's Research Center's video and daily market report. Take care.